Okay. So girls, you have your chat box now for now, okay, to ask me any question. I will unmute you. I will unmute you at the end of the lesson, maybe in the mid of the lesson. But let's begin. Vocabulary practice. I'm doing this just so that I don't get, I don't get distracted from sounds and voices. Okay. So we have here again a set of words like we had in the previous exercise, previous practice. Now, these words that we have here, these vocabularies, are somehow, as the last one was related to the medical, medical area, to the medical field. This one is related to the accounting field, like related to money and accounting and finance. Okay, like the terms that we use in accounting, the terms that we use in bank, the terms we use in finance. So these are this is a set of words that will explain us those kind of terms, those monetary terms, financial terms, accounting terms. Okay, so let's start doing it. Number one is so my way of doing this exercise is that I will explain you all the words first, okay, and then we'll solve the exercise all together. So let me explain you all the words in one go. Now, the first word is asset. Okay. Oh, great. Yara came also. Yeah. Okay. So first word is assets. Now, what is an asset? Please listen to me carefully. Okay. The definitions are down, by the way. When we are done understanding, when we are finished understanding the words, their definitions, their meanings, we will then match the words with their true definitions down in the question A. So what is an asset? Asset is all the property that you own. Okay, it means uh, all the property that you own, something or someone, that is an asset is considered useful or helps a person or organization to be successful. If we talk in accounting terms, the assets of a company or a person are all the things that they own, like the factory, like the land, like the cars, like the machinery they're using, like all the other profits and losses. So those are all their assets. Okay, so assets are all the things that a person owns, and it is usually used to settle debts. For example, let me show you with the picture. Now, anything that can be changed into cash, okay, all the things, all the properties, all like everything that you have, and that can be changed into cash, that can be changed into money, is your asset. Okay, that can be changed into money to settle your debts is your asset. So this is number one, asset. Teacher, can you write the meaning? Tala, the meanings are down below. Okay, I'm explaining you. Please understand them at the moment. The meanings are down below. So they are actually in question number A. All the meanings. So you will get the meaning by the end. Okay, let's understand the words first. Let's take it easy way. Let's just not be very quick and like worry about the meanings and all. Just understand them, and then I will tell you the meanings because they are actually down. Okay, so the next word is collateral. Now, what is collateral? Most of the words are nouns, by the way. Now, collateral is actually money or property which is used as a guarantee that someone will repay a loan. For example, if I want to take a loan from the bank or from a person, maybe, let's say I want to take for let's say 1000 real from Tala. Okay, I need 1000 real from Tala. Tala has a bank, let's say. Now, if I want money, if I want her to lend me some loan, I need to give her a guarantee for her satisfaction that I will repay her loan. It is possible that I will take the money and I will run away and never see her again, right? Or it is a possibility that I never go back and I'll never repay or whatever. So in such cases, the one who lends the money asks for a collateral. What is a collateral? It is anything. It is either money in the money form, in the gold form, or in the property form that you give that person to as a guarantee that if I don't repay you, you can take this from me by the end of this such and such time. Okay, so for example, I want 1000 real from Tala, and Tala says, how can I trust you that you will repay me after like 1 month? I say I need it for 1 month. So what I would do is maybe I have a nice, for example, I have a nice bag, okay, which is very expensive. So I would say that, okay, Tala, you can keep this bag as a guarantee, okay, until I pay you back. When I pay you back, you can give my bag back to me. I'm using this bag as a collateral, all right? So what is collateral? Security given for loan. It is if you take it as an adjective, secondary descendant from the same person but to different sons or daughters. So collateral has two meanings. One is security given for a loan. It is the literal meaning, especially in accounting terms. It has another meaning if it is used as an adjective, which means secondary. Okay, like from the same family, a person from the same family. Okay. Next is cosigner. Now, what is a cosigner? A cosigner is somebody who signs, yeah, a cosigner is somebody who signs a kind of, you can say, who is the second person who signs an official document. A cosigner is a joint signer. Like if you are signing a document, you're signing a claim or whatever, if there is another person, okay, with you signing it, then it means he is a cosigner. As you can see in the picture, okay? Like if you sign a paper and another person signs a paper too, that person is a co-signer. Next is creditor. Now, creditor is the person or a company or anyone to whom we have to pay the money. Okay? Why do we have to pay them the money? For any reason. It could be any reason. Maybe because they lent us money. Okay? Maybe because we had bought something from them and we didn't pay them, so we have to, it's due, so we have to pay them. So a creditor is a person to whom money is due. Like for example, the one who takes our rent, he is our creditor because we have to pay him the rent of the house or maybe the rent of the car. So a creditor is someone to whom we have to give the money. Okay, as you can see, the man is crying because he's giving money to the creditor. Okay, so the next one is currency. Now, currency is money in any form. It is simply money in any form. Next is okay. So the next one, girls, can you hear me? Please, can you just write because I'm not sure of my internet at the moment. Can you please send me a message? Okay, thank you so much. Thank you. Okay. So the next word is debit. Debit is debit is a little bit complicated to understand because unless you start doing or studying the accounting, you really cannot understand. It is actually a way of bookkeeping. Okay, so it is a recording of entries. When you study accounting, you will see that when you do bookkeeping, when you record entries, you have two sides of your book, the left side and the right side. Debit is usually the left side of the book, the left hand side of the book, on which you make entries. uh, uh, it shows different kinds of entries, especially the ones that you have received. Okay, so especially the accounts, the transactions that you have received are recorded as debts. So actually, a debit is a record of the money taken from your bank account. Okay, it is a record of money taken from your bank accounts. So debit is actually a record in your accounting book, a record of your you can say assets, a record of your expense, a record of your profit, a record of your loss in your accounting book. So debit is an entry in your accounting book. A settled debt is yes, it is almost like it's not to settle is different, but debit itself, it means when you have a part of your the left side of your accounting book in which you record the entries, especially of the things that you received. Okay, for example, if income is received, it is debited, so you will write it in the debit section of your bookkeeping. All right, now look at this picture. Debit all expenses and losses, all assets, the receiver. Now look at that word, the receiver. Okay, and credit is the opposite. It means all incomes and gains, all liabilities, the money that you have to pay. So he is the giver. Okay, so the debit is receiver and credit is the giver. That's the difference. Next word is foreclose. Now foreclose is a verb. Okay, now foreclose, please remember it is a verb, and it means to deprive someone of something. What, from whom, from deprive who from what? If the person or organization, now listen carefully, if the person organization that lends someone money forecloses, they take possession of a property that was bought with the borrowed money. For example, this is a couple, a husband and wife. They tried buying a house on, for example, let's say uh, they uh, uh, they uh, they borrowed the money from a bank to buy this house. Okay, now if they are unable to pay back the money, if they are unable to pay back the money, this organization or this person can foreclose. It means he can just take the hold of the house. If they are unable to pay the money, this person or this organization can is able to take the house. Okay, take away the house from them, and they can deprive them from the possession of that house or any property. So I will repeat: if the person or organization that lends someone money forecloses, they take possession of a property that was bought with the borrowed money. Okay, so because they borrowed the money from this bank, and they bought this property, they took the loan because of a reason for buying a house, let's say, and they were unable to pay at the end. So this, if they are unable to pay, the bank can foreclose. It means they can take the property that they were trying to buy with that money. Okay, now next is interest. Okay, now interest is the use when you pay money for the use of another person's money. Like if I have given you, let's say 5,000. Okay, if mice has opened a bank, I said, okay, mice, I'll give you 5,000 riyal. Please keep my 5,000. She will use my money, the money that I gave her, and she will keep giving me. Okay, she said, okay, you give me 5,000, and I will keep giving you each month like 5 riyals. Okay, and your money is safe with me. You can take your money whenever you want, but until I can use your money, I'll keep giving you 5 riyals each month or each week as an interest because I'm using your money. Okay, so it is actually the use of the payment of money for the use of money, and the more the money you deposit, the more interest you will get. Okay, the more interest, the interest rate will be increased and increased as you give more and more money to the bank for their use. And by the way, this is haram in our religion, just for your information. Then we have liability. Now liability is when, if you say that someone or something is a liability, you mean that they cause a lot of problems or embarrassment. This is like how we see it in a dictionary. Okay, but in terms or in accounting terms, a liability is the sum of money that the company or the person has to pay. Okay, the sum of money. Like for example, I have to pay the rent, I have to pay the salaries of my workers, I have to make other payments to other people or for other things. So all those things, maybe I did some online shopping and I have to pay them also. So all the things that I have to pay, that I owe to other people, owe, not own, owe, that I owe to other people, is called liability. Okay, or maybe if someone has given me money to do some work. Okay, for example, you gave me money to give you a lesson. Now, to give a lesson is my liability. Okay, it's not necessary in the form of money only. uh, it could be a service. Okay, you gave me money already. Okay, now I have a liability because I didn't pay off by giving you my service. So a liability is when you are bound by all the sum of all the sum of what you have to pay to other people. Okay, when you are bound by uh, such thing. Next is lien, or you can say lien. Okay, lien is actually a legal claim. So when we talk about lien, it means it is the legal claim of one person upon the property of another person to secure the payment of a debt or the satisfaction of an obligation. I will repeat. Now this is a claim of lien. Okay, let's see what is it. The legal claim, it is a claim of one person upon the property of another person to secure the payment of a debt or the satisfaction of an obligation. When you make a legal claim, it means you are claiming um, uh, you are claiming someone's property, okay, to secure the payment of a debt. Next is usury. Now, usury is actually it is a noun, and I will show you a picture that can make you understand very well. So whenever you want to take loan from the bank asks for a lot of interest. Okay, so from you, like you took the loan from the bank, now you have to pay bank some money because you're using their money, some amount of money. So that amount that you pay back to the bank because you have taken the money from them is called usury. And if it is very high, it is unfair, and you stay bound by the rules and by the obligations of the bank, and that's called usury. Okay. So usury is the practice of lending money at a high rate of interest. Like you give the money, I say, okay, you take my money, but you will have to pay me a very high rate of interest each week, each month, each year. Okay. So not only that you have to give me back my money that you took from me, you also have to pay me all that interest that you are going to uh, uh, that you're going to pay in periodic in periodic stages, like in 1 month, in every month, every week, in periodic manner. The last word is withdrawal. Now, withdrawal is when you take money out of your bank, okay, out of your account in the bank. So withdrawal is whenever you draw money from the bank for any purpose, Okay? When you take money for your own expenses, especially, this is withdrawal. So let's begin solving this. Number one, a legal claim on a property until a debt is paid. Like if I make a legal claim on a property, I say that this property is supposed to be mine now because until the debt is paid. If he is able to pay me back the debt, the money that I gave him, okay, this property is his property. But if he's unable to do this, I will make a legal claim, which is a lien. Okay, which is a lien. I will make a legal claim on the property. Claim means to say that this thing is mine. Okay, to make a statement, to make your point that I claim this property means I want this property now. I make a statement that I want this property. This property should be mine because the person was not able to pay me back the debt that I gave him. Next is another person who has signed a loan or document, that is a cosigner. Number three is money paid for the use of money. Money paid for the use of money. Now, don't confuse it with usury. Okay, usury is the high rate of interest to use someone's money. Okay, but money paid for the use of money in simple terms is interest. But if the interest is very high, okay, you keep the interest rate very high to let people use your money, especially the banks. Okay, the banks do that. Then that's usury. An item of debt that is shown in an account. Okay, an item of debt that is shown in an account. If you have an account, as I told you, and there is an item, entry is an item. Okay, so any item of debt in your account is called debit. Next is property to be used as security for loan. Any property that you use for security of loan is a collateral. Removal from, when you remove money from your account, it is a withdrawal. Money in any form is called currency. The lending of money at unlawful or very high interest rate is usury, as I told you. Okay. Now, any financial obligation such as money owed or unpaid bill is your liability. Any property owned that could be used to settle debts, any property owned that could be used to settle debts, all the properties that you own, all the properties, as we, this was the first word, is assets. Okay. Number 11, to take away the right to pay off the, that is foreclose. You foreclose somebody, it means you take away the right to pay off the mortgage. So he cannot pay because he cannot pay the mortgage is like in aqsat, okay, like installments. So once you cannot pay the installments, so that's over. Now you cannot have that property, and that property is closed. So that's foreclosed. One who is owed money, the one that we have to give the money, is creditor. Now complete each sentence below with the word from the list. Please remember that after this session, we have to come back again for reading. Complete each sentence below with a word from the list, then write a definition of the term below the sentence. Now use a dictionary as needed. Annuity. So the first word is annuity. It is the provision of a stream of payments made out on a periodic basis. So if you're working somewhere, okay, if you're working somewhere or if you have bought an annuity, it means that you will be paid yearly some amount of money. Okay, every year you will receive some amount of money as a return of your service. Okay, or uh, if you have bought something, if you have bought a share or something, then you will get an annuity. Annuity is a payment that you receive, as it is like an income that you receive periodically. Maturity. Now, what is maturity? In accounting, for example, if you have bought an, if you have got your insurance, health insurance done, or your life insurance, okay? So you, for example, you made a contract with the insurance company that the company tells you that you have to pay such and such amount for like 15 years, and after 15 years, your your insurance policy will reach to maturity, and we will pay you back all the money that you paid us. Okay, we will pay you back all the money that you saved. So that is called maturity. Maturity in accounting is, okay, so you keep on giving them, giving them for 10 years, 15 years, 20 years, maybe 30 years, and then it comes to a maturity level. It means it is fully grown when this organization, this insurance company, whatever it does, they give you back the money that you saved or you kept giving them. Okay, so maybe they say you, okay, you give us 200 each year, and we will pay you 20,000 after 5 years. Okay, so when the 5 years are completed, it means it reaches the maturity level, and they have to pay you back. Just 1 second, girls. I will put my charger. Just 1 minute. Okay, so the next word is investment. Investment is when you use your money for making money, like you give your money or you use your money for some business, for profits, for gains, okay, to make gains, to make profits, for business, for running a business or whatever. So those are all investments. Unsecured is it means that you give your loan. For example, you give loan to someone, um, and you don't ask any guarantee from them. That it means that that loan is unsecured. This person can take that money and never come back, or can never show up again. So that kind of process is unsecure. It is not secure. You have no guarantee if you will get it back or no. So unsecured is anything that is not protected. Then diversified, it means investment of money in different areas, in not just one kind of business, but in bonds, maybe in gold, maybe in real estate, maybe in mutual funds, maybe in national pension schemes. So diversification or diversified investment is an investment. Here it is diversified, but we mean investment by it. What kind of investment? Then when you spend money in different areas, not in just one kind of business. So I will do it quickly. Instead of buying only one company stock, develop a dash group of stocks. Develop a diversified group of stocks, like different group of stocks. So don't just buy from one company or one kind of stock. Buy different kind of stocks for business purposes. Okay, diversified. So to invest in different types of industries, it means diversified. You will be guaranteed a regular income if you purchase this annuity. Like if you take this annuity, you will get a regular income. As I told you before, regular income, it means somebody has to pay you on regular basis, like periodically, yearly or monthly. So when you purchase an annuity, you will be guaranteed that they will pay you every year something, like maybe you bought a share. Okay, so an income payable at stated intervals of time. A saving bond is considered a very safe, low risk investment. If you just invest in a saving bond, it is considered very safe and low risk investing of money to gain profits. If you need to borrow money, the rate may be higher because you own nothing, so the loan is unsecure, not protected. This bond will be worth $100 only if you keep it until maturity, until it grows to the full level. Look at the stage of investment and insurance when company pays you back the money you saved. Okay, so this was all about this chapter. Let's move on to reading. I will end the meeting now, and please join back me. At after 10 minutes. You can join back after 10 minutes.